Best advice for passive investors: really understand whom you're going to put money with, right? Deals work, or sometimes deals work or don't work. People always do work, right? I've always invested, and I'm a big passive investor even now. I put my money with a few trusted syndicators that I've always done well with. And usually when they send me a deal, I'm really not even going through the entire underwriting of it, because I trust the guy that I'm actually doing the deal with. And that's important for a passive investor. Absolutely look at the numbers, absolutely look at the location, look at the debt, look at all the other factors, but look at the group that's putting the deal together. Look at whether they are operating like a business. Look at whether they have, past performance is not a guarantee of future performance, but past performance with the right people usually guarantees that you don't lose your money.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Kranti Ponnam. He has 20 years experience across business, technology, real estate sectors. He's had numerous businesses, serial entrepreneur, and a lot of tech services as well, large organizations that they've actually exited also. Now, today we're going to talk about all the things he's learned in those industries in business, right? And how he's bringing those to the real estate industry as well. And some of it, some of it we've talked about often, and some of it not. But oftentimes we talk about these things, and it seems like something that we know we should do, right? But we don't actually get it done, and it's so crucial. I'm as guilty as anyone at these things. But you're going to hear Kranti talk about some of these things, and I hope that you'll take it to heart and apply these things today in your business. Kranti, welcome to the show. Honored to have you on. I look forward to the conversation, because even just a little bit beforehand, what we were talking about, I feel like some of the places that you are an expert in, man, we struggle in the real estate world in a big way, and you've brought that from building numerous companies and doing well there, and now how you're innovating and bringing that to the real estate world, I think is crucially important that we're innovating as well, right? We're often operating like we were 20 years ago, I think. And so I'm looking forward to learning from you. Give us a little more about those experiences. I know you've been in business 20 plus years. Give us a little more there and what you're up to, your focus now.
Sure. I originally, just a quick background about myself, I'm originally from India, came here to do my master's degree about 20 years ago. So fortunate to basically do an undergrad degree in engineering and then come out and do a master's degree. What I do right now has nothing to do with what I went to school for. So I actually always evolved in life. Did my master's and got a job in the tech world, became basically a tech programmer / a person who would set up SAP systems, which are business ERP systems that run major corporations. So got exposed to actually business processes, how systems work, and basically the role of an external consultant coming in and designing or redesigning a whole system for an enterprise company. So that's how I started my original career in the tech world. Obviously, figured that after a couple of years of doing it, I basically figured, hey, I was really good at this. This is what I should have done, not gone to an engineering school, but maybe gone to a business school. So I figured, let me go do this on my own. I wanted to basically, in a way, disrupt and change the way tech services was kind of being delivered at that point, and actually make it much more customer-centric, make it much more, what do you really need, rather than actually increasing my billable hours, is what I kind of figured out. So I went to my boss then, and I was working for a small tech services company in SAP. I went to my boss then and basically said, I want to quit. I want to do this on my own. He basically came out and said, you're really a rookie and you don't know how to do this. Let's partner. You're really good at, selling and getting customers and, all of the other processes. I think I can run the back end of the operations. Why don't you basically partner with me? It was a no-brainer for me at that point, because not having a lot of business experience, and I come from a business family. My wife comes from a business family. So the obvious mentality for me was go and figure something that I could do on my own, So I wanted to work for myself. And that bug has always been there. I started the tech services company. 3 years into it, we sold it to a little smaller, a bigger company. I exited, and after that, you're kind of stuck with what to do next. And I started a technology staffing firm, which basically provides technology staffing services to a number of different companies. And part of the reason was I figured, I've done the services play. I want to kind of get into something easier and kind of take time to figure what my next steps are. The staffing company actually did really, really well. Part of the reason is all my learnings that came from the first experience. I was able to use it into my staffing company. I was instrumental acquiring a lot of customers, kind of grew that to a bigger business. And 3 to 4 years into it, I figured I had to do something in the solution space, which I originally came from. So we started a company called Apicero with my business partner. In 4 years, grew it to over 2,000 people, exited it last year. Now basically going on to set up a few other entities that support the technology services in Snowflake and data and AI. And also started a real estate fund, which is predominantly multifamily, where it's through my company called Four Oaks Capital, which is the real estate syndication firm, and also started a private equity firm to invest in companies, predominantly technology services companies that work in that space. So that's a quick background about my past and experience and what I'm doing right now.
Yeah, I love the business background and then coming into real estate as well and being able to apply those things in this business, because I don't feel like I said earlier, I feel like often we're lacking, right, in that regard. Kranti, speak to some of that though. The things you've learned in growing businesses, a number of businesses quickly, even exiting them, and obviously just innovating in ways that you had to, right, to grow that fast in some of those businesses. How is that applying to, say, your real estate business now? Let's talk about some of those systems and processes that have been beneficial or helpful, or how you're going to see them be helpful even in the future for your real estate portfolio or business.
Sure. And when you look at it, there's a lot of similarities, right, between both of them are businesses. The fallacy of the real estate side obviously is, especially, and I'm talking very specific to the real estate syndication side. And this is not a knock on anyone. It's just what I've done is, the way I got into it is I started investing with a few syndications. People always pitch deals to me, and I went out and basically, went and put money in those deals. But what I started noticing is all of the other stuff was good. They would respond, the emails would come through, all of that. But most companies in this space do not operate like a business. In a business, you wake up, you start with your day with a set of things that everyone has roles and responsibilities. And, you build a structure, you build a process, you build systems around everything. What I started noticing in a lot of syndication companies, it was one or two people doing everything, and then the rest of it would kind of fall apart. This works until the deal works. The day the deal does not work, all of this really hits the fan. And I've seen it firsthand. And when I came into this, my biggest goal was to make Four Oaks Capital, which is a real estate investment firm, basically operate as a company. Have an org chart, have a structure, have basic responsibilities, work with good people, hire good employees, and we're on the path. I'm not saying our journey is done, but I think that's what we're basically building towards, is a sustainable long-term enterprise that basically will live on even after the partners are there or not. And that's the fallacy of most syndication companies, right? They're not able to really clearly point out any systems or processes. Obviously, there's softwares. Softwares do a lot of good work, but if you don't run your business, and I'm a big believer of data and running business by numbers and information, and most people really don't look at it, right? And most of the time, and the podcast that I have was basically started to help bring out the fact that most business owners really don't look at the information as they have to. They basically depend on P&L or a balance sheet or, sales reports and things like that. But your business is a lot more than that, right? There's employees, there's basic AR, AP, things that you always need to have your tap on. And most business owners really don't know what KPIs to even look for. So, and I think that's the fallacy of most real estate companies, is they will send you a report where they basically show investors a few KPIs. But as a real estate company, there's so much more, right? There's basically asset management. There's basically debt that you're working on, and it's blowing up right now everywhere. Where debt market, with the interest rates going up, a lot of people have no control in terms of if their caps are expiring. What do you do? So you really want, and that's what I want to build towards, is have systems and processes with people that are responsible to do it. Have a pure acquisitions team, have the asset management teams, and really work with all of those teams to build certain KPIs that they operate on a daily basis, weekly basis, monthly basis, and yearly basis. And we basically incentivize each of these teams to perform based on when they hit their metrics. And it's very uncommon. Obviously, if you study the big syndication companies, that's what they've done well compared to smaller ones. And I think the limiting factor for most smaller syndication companies is a lack of processes, either in capital raising or asset management.
For sure. Operations, capital. I mean, almost all those departments, we lack the systems and processes so often. You said so many things there that are helpful, but I mean, building a sustainable enterprise, right? Thinking about how a normal business is operating and built versus just trying to operate the piece, just thinking about buying the next deal, right? And building the actual team. You talked about having the org chart, the responsibilities laid out. It seems, I think oftentimes we feel like that's so basic, right? But oftentimes we still don't do it, right? We still don't have those things done. And I'm as guilty as anybody. I mean, I feel like we're always trying to work on those things or improving what that everybody knows what they're responsible for, right? Or changing it a little bit here and there, or almost on a monthly basis, thinking through those things. But for you, and I love how you laid out, KPIs are obviously so important in running a business on those numbers, even incentivizing the teams. Can you lay out maybe how you develop the KPIs? I get questions about that often. It's like, Whitney, what KPIs are most important for you? What are the main numbers? Well, what about the investor relations team versus the asset management team? Or how do you think through some of that, or even create some of those KPIs?
Yeah. So the easiest area, and we'll talk about any of the areas that you want, but the easiest area for KPIs would be asset management, right? Are you within asset management? There's different aspects of asset management. Obviously, are you having a delinquency problem? Are you having a leasing problem? Or are you having other problems with CAPEX? Are you not finding the contractor? So if you can, and it's not your Monday morning quarterback report that you just look at and say, okay, this is a high level display of where my particular asset is at, but also kind of drill down to the level of, hey, how many people are actually walking through the door? How many applications are we getting? And how many are actually qualifying? The assets that we buy are C plus B minus asset class. So those are very, very important to us, because that tells us, are we doing a good job in turning the property? Is our CAPEX meeting the norms? We're trying to raise the profile of the tenant, and we're trying to turn the property profile, right? That helps tell us. And we have a marketing team that actually goes out to market the property, not just through the traditional channels, but actually putting out even Facebook, Instagram, all of that stuff. all of these metrics basically indicate that there's a problem either in our CAPEX or in our marketing teams where we're not drawing enough foot traffic, or we're not drawing enough people into our CRM. So we implemented AI CRM, which basically you could basically schedule your own walkthrough, right? How many people are actually using it is a big important metric, right? Is it really needed for the tenant profile that we have? We've implemented it. Now we're actually studying whether people are using it and whether our tenant profile is really up to the point that they're comfortable just scheduling it through an AI assistant, or do they need a real person still, right? A lot of data that goes into it will help save the costs where we're spending, time, money, effort in implementing that system, but really is it giving the ROI? We also have an AI system that kind of sends automatic text messages to say, hey, your rent's coming up due in 2 days. It's due now. Pay without paying a fine, or in the next if you pay by 5th, all of that stuff. And we're still studying the impact of having those systems kind of play out and see if that improves a collection, that helps with better interaction with the customer, which is a tenant. And then is it creating a community within the property, or are we just alleviating these people by doing certain things that we're doing, right? So all of this kind of ties in, and these are not your top level KPIs. Your top level KPIs will not change. I mean, what's your occupancy level? What's your delinquency level? What's your outstanding? And then basically what is your year-over-year rent increases, right? This is that next level of information that drives all of the other stuff, right? And most people just focus on the top level, really don't get down to the lower level, because your occupancy goes up only if you have foot traffic. Your foot traffic goes up only if your CAPEX that you've done to the property is kind of converting, or your marketing that you're doing for the property is actually drawing the results.
Yeah, it's helpful. I was reading a book recently. It helps you think. I'm trying to remember the name of it right off, but ultimately, the author's talking about what's your most important number, and the drivers. He calls it like a mind philosophy. I think it's like your most important number, and the drivers thinking through that. But I mean, ultimately, KPIs, right? And I like how you said you got to drill down. If you think about the numbers that might drive me and my business partner are not going to be the same numbers that drive our maintenance men, right, at the properties, right, or even our investor relations, person. It's going to be very different. And so thinking through KPIs that at each almost department level, right, that all filter up to the main KPI.
Correct. And that's where it's important to kind of set up that structure. Obviously, when you're small, it's tough to set up department-wise KPIs. But if you can think through all of them and actually get them to a point where you can hand it off, it could be, people. It could be an employee. It could be someone that you hired just for that particular asset. But someone's actually looking at it. Someone's paying attention to it, and it's getting the due attention. All it comes down to now, especially the next 3-4 years, and even later, the syndication business is an asset management business and I think that's all it comes down to. Someone fails at running the asset, and if you come in and do a good job, I think the money is there. It's on the table. Are you going to take it or leave it on the table? Depends on your skills and abilities and your mentality. And that's all it comes down to. And most people just fail. And this is the other reason that I found that most people fail. People who come into syndication, the mindset is, I want to run a business. I have a side job. This is going to be a side hustle. It'll become a main hustle if it goes up. They put a lot of effort up front. There's a lot of time commitment. But once they start doing first deal, second deal, at some point that falls off and they just run it. And at some point, and I have a similar situation with Four Oaks Capital where, we bought a deal we thought was a home run in tertiary market, Clemson. We all thought we could manage it during COVID. But what happened was, being a tertiary market in COVID, there's a big employee shortage. which we couldn't figure out how to solve, we basically let go of two different property management companies, brought on the third company. The asset was going down the drain. We saw the numbers dip in, so we took it in-house. That put a lot of pressure back on us because we had partners that were part of the team, but were obviously not ready to take on that role as asset managers to run the property on a daily basis, which is a very, very tough job. If you're bringing property management in-house, you need to have scale, you need to have processes, you need to have SOPs, you need the whole 9 yards. And when we did it, we had nothing. So what it basically did is it put a lot of stress on the partnership itself, and we ended up losing a couple partners because of that, right? So my point is, when you have 3-4 guys come together, all from non-business backgrounds, were employees before, do not see a business, do not see basically, when you see only good times like in COVID and you don't see tough times, and when tough times hit, that partnership is gonna like crumble. But the good part is we were able to, it was one of our best assets that we were able to turn around, return money to investors at 26% average annual return. At the end, it did fine, but the lessons that we learned from it was, if we don't kind of do our legwork ahead when we get into deals, and we don't understand the market, and we understood the market very well, it's just when COVID hit with the employment situation, it was a curveball, and the curveball basically blew up the partnership.
Yeah. I heard a quote just recently about wind strengthening the root systems of trees. I thought it was a neat analogy of, the wind comes and it either strengthens the roots or the tree falls over, right?
Yeah.
It does. If you never experience the wind, then you're going to fall down, right? When it does come. But Kranti, I think it's a great example there in numerous ways through that process, and you all taking it in-house, importance of operations, importance of processes, and appreciate your just transparency in that deal and the operations of it and the importance. What about, speak to some, I know you're big on tech and a big background in tech. Speak to some tech that's helped you all to manage the KPIs, even from asset management or across different divisions, or even as you as the leader. What's been that technology that's helping you all now, and maybe even some ways you all are using AI?
So as far as from a technology standpoint, all of our assets right now are in the Atlanta market. We use one property management company, which for us has, luckily has done well. The KPIs that most of the stuff that has been built from a KPI dashboard standpoint are built basically by writing code within Google Docs and writing Python code in the back end that draws information from our property management system, right? So that's what we predominantly use. It gives us, the way we look at reports is it gives us historical information about everything in terms of what's basically our delinquencies been, what's our occupancy been, what even from the fact that in the last 8 weeks, how's the trend been in terms of leasing, in terms of occupancy, in terms of rent increases when we do renewals, all of that stuff, right? And that really, really changed the way we looked at information, that I wanted to go down to the next level where, the asset management team can look at, make ready boards and things like, when did the tenant move out, to when the unit was trashed out, to when the unit basically was turned, to when it was rented. All of this information rests somewhere. But for us to basically get it in a templatized way where we could run the report by the particular property or combine all our property vacancies to see what's going on. Hey, do we bring an external contractor? Do we bring more than one guy? And when we buy these assets, we're buying them for a reason. We're going in there to, either renovate 70% of the property or do exterior renovations or interior renovations. So CAPEX management is a big deal for us.
Yeah.
And building that reports, especially using, and we don't use a system per se, it's a homegrown software that kind of got developed. The vision is at some point, if we could put it into an app and maybe open it to the external world, it'll probably yield results. But for now, we're basically using and what really helps us is it's one system, right? It's one asset management system. It's one property management system company, right? When you have multiple, and we've been in situations where we were in Yardi or all of the other systems. We use AppFolio right now, and AppFolio is comparatively compared to either Yardi or other systems, I think a little better in terms of the technology, or at least in terms of information that we pull for using our code into our dashboards. I think it just is easier. The APIs are a little more convenient. It's a little more futuristic through that process, but it becomes complex if you don't have that kind of software, or if you don't have that reporting dashboard, if you've not made that investment into developing that system or going out and buying another system, right? Whatever it is, you just need to have a consistent way of looking at information across your portfolio. And that was important. And that's a really important thing for us.
Yeah, I would say most of the listeners can't go write code like that, right? And make something like that happen. However, I think you summed it down there. You do have to have just some centralized place to see the data, right? And hopefully lots of historical data so you can see trends. And because if you're not tracking it or looking at it, right? Oftentimes we track things. We track so many things at times I feel like that we track nothing, right? We look at so many, and so it's like, man, do I and does the team know what's the most important numbers, right? And I think it's helpful. For sure. Any other ways that you all are using AI, whether it's on the capital raising side or the operations side of the deals, anything?
So we basically
out of the norm.
I mean, as far as capital raising side, we use AI a lot. I mean, we've used AI before in terms of not just ChatGPT content, but we've used AI and when ChatGPT came out, it was like, oh my gosh, this is great. It's great because it's free. This thing has been there forever. It's just when people realize it's free and it was, it creates content like no other. But we've used that for over 2 years. We were using a different AI content creator for the longest time. And I think there is innovation now on that end to actually set up the drip campaigns in a way that they actually can work on their own, and they can really work through. And we use Active Campaign to use for our marketing in terms of running campaigns and being in front of investors and sending out updates and all that. But there is a lot of innovation that is coming out that I've seen. We've not implemented it, but I think which is very, very powerful in terms of actually automating a lot of the work that our content marketing teams are going to be doing. But we're not using any of those on our capital raising end yet. But I think over the next 6 to 9 months, adaptation to that is going to be critical and key in moving forward, because I think everyone's going to be doing it. It's just a matter of time with what's going on. And I think there's a lot of abilities on the ChatGPT side, but there's a lot of downside of using it too. And I think where AI is going to go it's going to not just be generative AI, but it's going to be general intelligence AI, where it's going to be artificial general intelligence, where AI knows, Whitney is this customer profile, this is his investment thesis, and these are the type of information that he would like to consume, and actually make it much more, investor centric, personalized investor centric, where that's where the artificial general intelligence direction is going to go, and not just, throwing out a ton of content which you may like or you may not. If I send you private equity information of investment in my private equity fund, which invests in companies, you may not be even open to it, right? So really understanding that to that level and really tailoring it to your needs is probably what is the next evolution.
Yeah, no, that's interesting to think through. There's so much AI talk right now, right, and how to use it in different ways. Well, all right, Kranti, shifting gears just a little bit. I love talking to operators like yourself and who are doing big things in this business and industry, but I always like to ask, your expectation over the next 6-12 months, right, for the real estate market. I know none of us know for sure what's going to happen. However, what we do believe is going to happen affects what we're doing, right, or buying or selling or whatnot. So what are your predictions, or, and how is that affecting, what you all are doing in the day-to-day?
So we were very, very active this year. We bought, I think our two biggest deals were earlier in the year. We still are looking for deals. My big thing is, I think, the way I look at it is, I think this is the time to buy, but you're not buying it for today's numbers. We never buy a deal for what it is currently, right? That's the nature of our investment. I wish we go to a point where we just buy A-class assets and they're always nice looking, but we never buy a deal that actually makes sense today as it stands. We buy it for what it'll be in a couple of years. And that's the value at play that we're used to doing. And my prediction is, if the deal, depending on, again, there's three factors that I always say where the deal works. It's the debt, location, and the price. And right now, the pricing and the debt are not yet in line for most deals, right? They will be in line maybe 3 or 4 quarters down the road. People that will buy right now will look like geniuses, right? The rates will come down eventually, but it is going to be it's going to be higher for longer. And I think a lot of predictions on the rates have all gone wrong, right? You could look at every prediction that most people have made, and everyone's basically, I don't think anyone ever predicted this. It's just out of ordinary. And I think at some point, this has to start coming down. There eventually will be a slowdown. I mean, it's inevitable that the money is going to run out after a point, and people will start pulling back a little bit. So I think if the deal's right, if you feel confident about the location, I think if it cash flows for you to cover your liabilities and your expenses, and if you can hold it for longer, you always will come out on top, right? That's the best part about real estate. If you're well capitalized, or if you have a debt structure that's not going to be prohibitive for you to get out, you're always going to do well. Like, even if you bought a property in 2006, 7, 8, now you look like a genius because that probably went up in value. But it's just your opportunity cost that you have to take into mind. But I am personally pretty bullish that, there's a thing that buy high, sell low, or buy low, sell high. Most people bought high, and now, you have deals that are coming out at discounted price because the rate caps have become,
right.
There's no way to make sense of the debt payment because of that. And there's going to be those deals.
You got to have the cash to weather the storm, right?
Yeah,
for sure. What about what's your best source for meeting new investors right now?
So best source I come from the tech world, right? So my investor world has a lot of employees, friends, families, referrals. I think my best source at this point is still referrals, through our existing investor base that has gone full cycle on our deals. There's nothing like returning money to investors, right? If you actually do your job, and even if the deal goes bad, if you do your job and they see that you're being truthful and rightful. And most times when I do a deal, we do deals only when we can stand in front of the deal and say, if the deal doesn't perform, I'll perform. I will not do a deal if I don't have that level of confidence. And that's the level of confidence that I really need to have to stand up there and go raise money. So my best source of raising capital is still through referral network. But at some point, I do know that I need to get out of just friends and families and, referrals and all that. And it needs to be an organic engine that at this point, it is an organic engine that's kind of drawing the referrals in. I just needed to go out of the network a little more to open it up to a lot more. Because I think the biggest impediment for growth in the syndication business is obviously lack of processes that won't, and some storm hits you, like I said, will basically blow it up. But biggest impediment is always capital,
Yeah. Kranti, what's your best advice for passive investors right now?
Best advice for passive investors: really understand whom you're going to put money with, right? Deals work, or sometimes deals work or don't work. People always do work, right? I've always invested, and I'm a big passive investor even now. I put my money with a few trusted syndicators that I've always done well with. And usually when they send me a deal, I'm really not even going through the entire underwriting of it, because I trust the guy that I'm actually doing the deal with. And that's important for a passive investor. Absolutely look at the numbers, absolutely look at the location, look at the debt, look at all the other factors, but look at the group that's putting the deal together. Look at whether they are operating like a business. Look at whether they have, past performance is not a guarantee of future performance, but past performance with the right people usually guarantees that you don't lose your money. The worst thing in an investment that you could do is lose your shirt on. As long as you don't lose your principal, I think you're done okay. And within a real estate investment, compared to the stock market, you're always going to do better. Like the stock market, no one gives, like, even your best financial advisor does not beat the market. Even my worst real estate investment deal has always done better than the market. So, if you actually pick your GPs right, that's a home run.
What are some habits that you're disciplined about that have produced the highest return for you?
Time management. That's something that I've learned very hard way. I'm still a work in process, and productivity is something that's very high on my agenda because of the number of balls I juggle in a day. So being very protective of time, and I spend a lot of time on family and kids and all that, but being protective and prioritizing what gets my time over what I won't give time to is, I think, the biggest, my biggest value has come from that. Is I'm being very protective of what I will work on and not look at. So
yeah, no, it's a hard balance, right? It's hard to manage your time well, not get distracted. I see it in my boys all the time. Like, man, they're so easily distracted. But then I just think about myself. I'm like, man, so am I. Right? So am I. Kranti, how do you like to give back?
I've always believed in paying forward and I'm a product of someone coming out to give a helping hand, and coming from basically very humble beginnings and able to do what I'm doing. I'm always looking to do better in terms of giving back. We've basically have a fund scholarship that we go out to India, where we have a lot of people and staff that come from underdeveloped portions of India, and we go educate them on technology and try to get them jobs in the technology field by helping them become employees of our company for about a year, learn things, and then go off to find jobs. That's a big area that the impact of one job that creates an entire family is just phenomenal, right? You have one person that does well in the family and just change the whole family dynamic. So that's an area that I'm really bullish on. I'm very, very passionate about it. I support our local Indian temple. I'm a trustee there, so do a lot of work for that. So that's my way to give back.
Awesome. Kranti, pleasure to meet you, have you on the show, and your generosity today. I mean, just talking through your background of successful companies, building successful companies, then bringing that to real estate. I think it gives you such a leg up than guys without any business background, right? There's so much of the day to day that you think you're just operating a piece of real estate, but if you want to scale, it's so much more than that, right? It's so much bigger. When you're running an organization, and so thank you again, just for your transparency today in a number of ways and helping us think about how you've scaled and how we can apply that to our businesses as well. How can the listeners get in touch with you and learn more about you?
So, KrantiPonnam.com is my website. I'm pretty active on LinkedIn, Instagram, Facebook, all of those social media sites. Four Oaks Capital is the real estate syndication company that you can reach out to me on. So any of those channels.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.